But in an area where there is either a predicted decline or there is a demonstrated decline in the economy, in the local economy of the area, real estate projects, residential real estate projects with lease or rental characteristics become unpredictable and they become much more risky. So case in point being, I came across projects in Oakland in the Bay Area, and I live in San Francisco, so Oakland is close by. The problem with Oakland is Oakland has been a troubled area for several years. Okay, and this is widely known. Okay, there has been a lot of crime in the area. The government has made several attempts to gentrify the area, make it more amenable to industries, or rather companies setting up their offices, and young professionals moving into the area and setting up their residences in the area. But gentrification of any such area takes 30 to 40 years. Okay, places like Oakland are still in the early stages of that transition. Now, there are parts of Oakland which are really good, and the rentals kind of reflect that the high demand of the area. But there are several other parts of Oakland that are not that great. And the problem I found with even those projects that were located in good areas of Oakland is Bay Area in general post-COVID has seen a significant decline in the influx of migrants. Okay, there is a net decline of around 6% or something from San Francisco itself, where people have either left San Francisco for good and they've just completely moved out of California, or they have just, left San Francisco and gone elsewhere 40, 50 miles out, because a lot of tech companies are now either fully remote or partly remote. So keeping that long-term demographic trend in mind, I find that, and that gets reflected in how local businesses are going to behave. And I think there's one project here in California, in the Bay Area, I think it's in Oakland as well, which is being sold by a competing regional center, where when I look at the track record of the developer, I don't see a significant history behind the developer. Okay, and look, I'm not saying that the developer is definitely going to fail, or I'm not, kind of making a judgment on a final judgment on the developer. There is a possibility that I am wrong and they deliver to the timeline exactly as they said they would. But given the information I have, I was not comfortable with the prospects of the project, given the lack of history that a developer has. Like a very clear-cut example of this is, think about this in terms of how Warren Buffett thinks about investments. He will never invest in a startup. They look for projects or they look for companies with several decades of demonstrated history of delivering to their customers. Okay, and you have to think about it in a similar manner if you are going to put your capital behind something which is already so risky. And that's my take.
Got it. So Sid, I know we touched upon this a little bit earlier with the example of a project, that started in 2019 and is now, coming onto market. But, I think the Bay Area is a great kind of illustration of, what can happen over a 4 to 5 year time horizon. So why don't you kind of walk us through this visual and, how you've seen this kind of play out in your backyard?
Yeah, sure. So I think this kind of perfectly, in fact, I was looking at this tunnel thing that you've shown on the page, and I was just thinking about this tunnel that connects the San Francisco area to Mill Valley, which is, by the way, a really nice area. But, switching gears and, talking about how things have panned out in the Bay Area, especially a place like Oakland is, look, Bay Area is already struggling with a very high cost of living. Okay, San Francisco, surrounding areas, even South Bay, especially areas like Palo Alto, Menlo Park, these are not areas which are meant for people with moderate income levels. These are high income, luxury areas. The quality of homes that you may get in these areas may not be very high, but just the fact that the location is so prime, people end up paying top dollar for housing. Now, unfortunately, given COVID and given the rising interest rates, a lot of businesses, and by the way, this also because of COVID, and at the same time, the fact that the government in San Francisco has failed miserably in controlling crime in the city, which at this time has impacted the city in such an adverse way that a lot of businesses have started shutting down. Every other day, we read about some retail store, closing in a mall. And then we just read that the Westfield Mall in San Francisco is also probably getting foreclosed because they were not able to repay the debt that they have raised, or rather not even able to service the debt that they had raised to finance that development. So all of these factors are also, being, and at the same time, to add fuel to fire, the tech industry in general has seen majority of layoffs in the current macro environment. Okay, that's the worst hit area of the economy. Even though it's small in the overall scheme of things, there are like thousands of layoffs that have happened in the Bay Area. Now, all of these factors together have not only prolonged the timelines for real estate development projects in the Bay Area, but they have also made it extremely uncertain as to whether these projects will even succeed. Okay, you do not want to be in an area where people are looking to leave. You want to be in an area where people are eager to come. Okay, and I don't know what the government is going to do to turn this tide in the favor of, the area in general, or in the favor of businesses here. But this is something which, just rings alarm bells for me all the time. Like I cannot advise anybody in good conscience to invest in anything that is being developed in the Bay Area. Even if the developer has a really good track record, I would probably stay away from investing in this area just because of the macro factors that are not in the favor. So I think, as Warren Buffett said, whenever an industry with a reputation for bad economics meets a management with a reputation for good management, it's usually the reputation of the business or the industry that remains intact. So in this case, I think that's what's going to happen as well. So that's my take.
One of those kind of easy to find, public resources is population gain, right? And so when we look at this chart here that shows the United States in 2022 by state, we can very easily see that the Southeast, Florida, Georgia, where the Twin Lakes project is located, has, one of the highest kind of migration population gains, contrasting, with some of the West Coast here, California, Oregon, where people are leaving, right? There's just population loss. And, when people leave, generally, they're not leaving to another country. They're usually leaving to another state. And so, the red states is where, on this map, red people are leaving, blue is where they're going. And you see a lot of that blue, concentrated here in the Southeast. And this particular region here is essentially where all of Coulter's projects are located.
Exactly.
Right? So
exactly.
That's not a coincidence. And then when we kind of translate that over, we talked previously about, supply demand and what does that mean? Well, if supply continues to increase or even stay steady, but the demand for housing drops because people are leaving and they don't want to be a homeowner or a renter in a given geographic area, you see that same thing kind of playing out in the price of real estate, and you see, a sharp decrease, particularly in California, the darkest, being here in the Bay Area, right here. But then in Florida, you see the opposite. You look at Miami, and prices are stable or they're still increasing, right?
So that the disclaimer is that what I am doing here today is strictly voluntary. A number of folks have approached me in the past after my first interview was posted, after I filed my EB5 application, to get advice on the projects that they were looking to invest in. And it turns out that some people have the suspicion that for some reason I'm getting paid by EB5AN or any other agency to advise people. And I just want to make sure that I'm very clear about this. I am not getting paid to do any of this. This is purely in a volunteer capacity.